Good turnaround Tuesday, everybody. Alexander, Mary, how are you? Jatine, how are you doing? So let's take a look around here. King
Morning, mate.
Dollar. Oh, hey, Brian, how are you?
Yeah, not too bad, mate. Not seeing your charts as yet.
How about now?
Yep, there we go. There's the gold.
You mean the dollar? Yeah, King Dollar. Yeah. So, nothing's stopping it yet. Pretty interesting move in yen, but, sideways. I think Grega thinks it's like, this was 5 and now we're in this corrective phase, but I don't know. I wouldn't do anything in front of the BOJ. What do you think?
I'm feeling more and more bearish about this one.
Are you?
I've got a bit of FOMO. I want to be short some.
You want to be short in front of the BOJ?
That's what I don't want to be, but I want to be short. We're seeing these lower lows coming in. Yesterday we had a lower low than last week. The highs are just edging down. It looks at the moment more consolidation, but there's a very, very shallow downtrend from the highs. So get over the Bank of Japan hump and see where we are.
Yeah, it looks like the lows that are holding are, important. We take that out. Maybe there's some space here for it to break. I haven't even checked yields. What are they doing here today? They're down another 5 bips.
Yeah.
So yeah, they're both kind of in line. They look similar, don't they?
Yeah, we look to be following that at the moment. Where's all the sudden positivity gone from the Fed? Yields should be busting 3% when you're talking about 50 to 75 basis point hikes.
And that's next
the other way.
Yeah, next week, right?
Yeah.
Getting a little bounce in the metals, but it's not impressive. And look at what it held. Almost to the pip yesterday, inside day here. I don't know. It could pop, but it looks vulnerable to me. And S&P's risk came back yesterday. Was it all Elon? Was that the major catalyst? Him buying Twitter? I hear he doesn't like some people. He's going to bump them off.
He's now in control.
Yeah.
That was a big turnaround yesterday.
Yeah,
very big turnaround yesterday. But it's Europe followed. Some in Asia followed. Europe's holding up, but futures are showing negative in the US. It's all looking a bit dead cattish, if you ask me. Stocks and FX.
So I see you started your flow show. Is that correct, Brian?
No, not yet. I'm just covering Paulie on the morning.
Okay. And when's that start?
Sometime in May.
Okay, that's next week. All right. Well, anyway, I want to let the viewers know that Ryan's going to be, what was the European crossover. So if you're in Europe, and you're up earlier, you're going to have Ryan for what's going to be a half an hour broadcast. Yeah,
not too early.
Okay. So, I wish you a lot of success on that, Ryan. And I think you're going to add a lot of value to people before the U.S. Open. So I think it's great. And I love the name of the show. It rhymes, right? Flow show. Very good. You're a poet, buddy. So how about Aussie? One of the few currencies that, isn't making new lows. Was this enough of a pullback in Aussie to start thinking about it, getting long here?
Yeah, I think the Aussie's shown a bit more signs of being able to hold the lows here. Potentially being less dead cat than the rest of them, pound and the euro. We've got some inflation data coming out, I think, tonight. So that's going to be watched, obviously, for the next RBA meeting and its moves. Okay. So need to watch out for that. But I think if you're going to see a pair versus a dollar that potentially can hold up a bit better, it's the Aussie.
And Canada here looks pretty strong.
I still don't know what the loon is doing. It's up, it's down, it's up, it's down. You know.
Yeah, and crude tried to recover. It's still working inside this descending triangle. We have a pretty good oil guy today, Anas Al-Haji. He's very good. I think he's relocated to Saudi Arabia. We'll see if we could get him to go talk to the prince, see if they'll pump some more oil.
Yeah, that should be good.
Yeah, and I think that we've covered the board. I mean, copper hanging on by a thread. I mean, this is an industrial metal, and you know, I don't know if there's enough demand destruction, but I don't think there's, you know, bottlenecks where you can't get copper because of what's happening in trade. I know there's a shortage of mines. Yeah,
we're going to need to watch the commodities, things like metal, iron ore, copper, that sort of thing, because we've just literally had headlines out from China Z saying they're going to step up infrastructure construction. You know, we know they're facing a slowdown in GDP, so one way to boost it is to spend money on infrastructure. So if they're going to commit to some big projects, you know, that's potentially a boon for commodities and the like.
Will they let construction workers out of the lockdown to do it?
They can't do it any other way unless they're going to build it with robots.
It's so ironic. I mean, they're still locking down and talking about this, you know, maybe it's down the road, but
it's probably down the road. I mean, it's the perfect time if they're locked down. You know, you're not going to cause disruption on the roads and on the rails. You can just go building and no traffic jams. Would you love to deal with that in America?
Never thought about that. And the lockdowns just are really severe. I mean, I've seen some American reporters that are stuck there in Shanghai, and it's brutal. So
Beijing going as well now. That's that's a big one.
Okay. So I mean, just looking at a couple subsectors, you really need this to turn. And you know, what did put in a good day did take out the low, didn't tag the line, doesn't have to. You know, I'm still waiting. I'm looking at you know, semis are really hated now. They were loved. I still think we have a semi shortage, don't we?
Yeah, and obviously that's not going to be helped by what's happening in China.
Yeah. So you know, I think this is one of the groups that, if the market is good, it should act good. Should be a performer. David Hunter, that's one of his favorite groups, and my favorite group is
the BGs.
ForexAnalytix.
The BGs.
The BGs.
This.
Cannabis.
Yes, and let's see how it.
There you go. There you go.
The old COVID meds.
It helps me with my depression. Anyway, so you know, it looks like it could be putting in some type of 3 drive, but
well, let us know when you need to restock, and we'll go long.
All right, buddy. All right.
What kind of quantities
every
are we
month
talking
or so.
about, Dale?
Huh?
What kind
What's
of
that?
quantities are we talking about?
Oh, you know, the kilo here, kilo there. You know,
Share with my friends.
What's a kilo among friends, right?
Yeah, you know, Johnny Depp.
Probably like probably 30 years.
Something like that. So, you know, I mean, don't want to run out of that. Anyway, that's why I can't leave California. They deliver it here now. So anyway, just a group to pay attention to if you can. Anyway,
all jokes aside, that cannabis stocks are driven largely by regulation and legislation and all that. You know, there's all these rumors. They're going to get you know, allowed for certain usage in certain states. Maybe not. Maybe they are. It's a long story. But
the
main
thing is they can't be banked. You know, so you know, they can't deduct. They have to, you know, it's not like they have
which is ridiculous, to be honest.
Yeah, and then, you know, if you look at them, I mean, if you want to see a group that's been trashed for a year or so, you know, look at all of these. So
yeah, look at MSOS. That's the ETF of a composite of cannabis stocks. MSOS, MSOS.
Okay. And you know, you would think that they would do it. I mean, the revenues are pretty good for you know, government. States are doing okay, and you know, you would think the Fed would want to tap
Prices
into
have taken a hit though.
Look at that. Yeah.
Yeah.
That's your monthly.
It just has to do with federal
I like this
regulation.
chart. Yeah.
Yeah, 12 drives to a bottom.
you trade those too? Yeah, in fact, you know,
These are the best.
That's what we're having in the dollar now. I'm looking for about 20 drives to a top in the dollar. I think we're on about 15. But seriously, guys, on the dollar, where are we going?
Good question.
Sky's the limit.
I mean,
Sky's
you
the
know,
limit.
104. I know some people were looking for 102. We're there. Some people saying 103.5. Ryan, you know, warned everyone off of the euro. It's really something here. The cable, you know, breakdown following through. So
Yeah.
Yeah, the question, the thing is, the world cannot afford to have a strong dollar for too long, and you know, this is going to be causing ripple effects. But you know, I personally think we should be close to the top. But obviously, these are famous last words.
yeah,
I think if we want to talk like long term, I think this is probably the swan song for the dollar. I mean, this rally, I don't know how long it's going to last. It might be several more weeks, or even under circumstances could be a few months. But I think this is the last hurrah before a big bear market. So I don't think the world will have to suffer from a strong dollar for much, much longer. But for the time being, yes, you have to respect dollar strength. And there is currently no technical or fundamental thesis in the short term to advocate for a short dollar position. Not yet.
Yeah, I never would have thought we were going for the COVID high when we were rallying here. You know, I was looking at retracements and stuff. This
yeah, but things have changed since then, right?
The war?
No, it's mostly inflation that has changed, and that due to political reasons and political circumstances, the US is taking inflation seriously than other big economies. So for the time being, it's the market, you know, pricing in this divergence, let's say, in the path forward of monetary policy, plus the dollar, of course, will get to benefit from some risk of flows as well, right?
Right. So let me ask you, Steve, did you cover shorts in
no
S&Ps yesterday?
No.
Bounce? Okay, so you're not impressed by Elon buying Twitter either. You know, the deal may not go through.
I think it will.
Doesn't matter.
I think it will.
Really?
Well, I think the market, it might matter to the market. And it might matter to the market if the deal does go through because he's leveraging Tesla stock to do it. And he's had margin calls before on his Tesla stock, if you have a memory that could think back. So
you know my opinion about Tesla, as the other pillars of the quote unquote growth stock insanity have started tumbling down. Tesla is not going to escape having the same fate. Tesla's valuation is pricing in UFOs, unicorns, rainbows, you know, you name it. And there is no chance it can withstand reality. And reality, as always, it might take some time, but it always hits you in the face.
Okay.
Yeah, but man, that was a flex move. Boy, I tell you.
Oh, yeah, absolutely. No question about that.
Yeah.
Good morning, everybody. How you guys doing?
Good morning, mate.
Good morning.
Good. Hey, I just want to take you over to the sterling. This is the one I'm really focused on today. I know I blogged about it yesterday, but if you look at the bearish wedge and the completion, the maximum completion that I can see because just kind of give you like use this as a teaching moment when you're measuring, like, I'm sorry, I said flag, bearish wedge. Whenever you're measuring a wedge, you can measure pretty much any like 2-point like touch from, you know, the most narrow to, you know, most, you know, the furthest where you can measure, you know, the low, and, you know, where the furthest you can go out on the wedge. And that would be right here, right? When you have at least one, you know, point touching, you know, the trend line, and then one, you know, a price point. So this, the actual wedge target takes us to 126 like 30, and we're almost there. We're getting close. I mean, we're getting really close. But also what that coincides with is if you look at the, you know, pound dollar and just go over to a weekly chart. Let me just pull up a weekly here really quick. Oh, there's the monthly. You can see the, you know, descending wedge that we had, you know, from way back. This is 2008, seven. I'm sorry. Yeah. 2007 highs. That was when we were, you know, traded above 2. Remember that, Ryan? The good old days, right?
Oh yeah.
Oh, the good old days. Back when you could really travel the world. What's that?
You could buy a beer in America for cheap.
Yeah, you could buy a beer in America. Hell, I remember traveling too. I remember going through London Heathrow like right around then and trying to buy some food, and I was like, oh my God, it's so expensive here. Anyway, regardless, we're actually testing that wedge support like near these levels. So yeah, I mean, I expect the sterling to find some sort of support around here, but that doesn't mean it's going to. It's just, you know, kind of what I'm targeting at the moment. You know,
can I ask a question, Blake, on just going back to your measured lines? So how do you pick your measured lines? You know, why did you pick that there rather than from the first touch where the wedge started?
Oh yeah, well, first of all, you can't do it from here because there's no trend line that measures to that last point. You see what I mean? So if you if you grab that, let me move that out of the way. So if you grab the blue, I'm trying to grab the trend line there. So you grab this blue line, right? It doesn't measure to back here, right? Because there's no price that touches it. So you actually have to measure from here.
Completion point. You take it from the first completion point from the up and down move, if you like.
Yeah, and that should be your maximum target. Like I usually don't even target like that. Because we usually never even make it. But the sterling is such a massive breakdown right now that looks like what's going to happen. And, you know, obviously we're trying to do it right now. So
yeah, I don't use measured lines. I'm just asking how you go about, you know, for others in the room, how you go about.
Yeah. And typically, you know, I tend to, while you're in the wedge itself, you know, I tend not to measure that far out, you know, just from you know, as a trader, when you're trading, I try not to maximize my targets because they don't get hit that often. So, you know, because you get reversion to the mean quite a bit. So I try not to do that. But in this case, I knew the sterling was really breaking down. I mean, this is a year-long channel we'd been in that broke to the downside, which is rare in itself. But it really clobbered anybody who was long. Anybody who just had long-term sterling longs just got absolutely wiped. So now, knowing where we're at, knowing that the dollar is, I would say it's very overbought. The sentiment is, you know, extremely bullish. You know, it's actually at extremes right now. I would think that the sterling's capable of a bounce at these levels. Now, that's not me saying that the sterling is ready for 150 again. That's me saying the sterling, you know, may bounce back to 130 from these levels. So that's what I'm trying to. That's where my target is right at this point in time. So anyway, just thought I'd throw that out to you guys.
Oh, great.
Yeah. So, you know, as far as the euro goes, I was actually quite surprised when we were at fresh lows this morning. However, you know, one of the things, and if you read the ForexAnalytix analysis, and this is, you know, my analysis last night, is just, you know, as long as the euro stays below the 107.60 level, we have to target, moves to the downside, and that's where we're at. I mean, as long as we stay below this breakdown point, you can see that red line. The next target for the euro realistically comes in at 105.80, and so if you're buying the euro at these levels, you have to think about that's a possible downside target, which is about 100 pips from where we're currently at. So, if you guys are just trying to pick bottoms here, just remember, you pick a bottom, you might get stinky fingers. Oh, that's a bad joke. Okay. All right. Glad no one's laughing. All right. And
I never heard that one before. That's funny. I'm kidding.
All right. Well, you pick bottoms and you might wake up with a spoon in your butt, Stelios. How about that? Huh? How about that? All right. Anyway, no, just
here's one thing I want to ask you guys.
Yeah.
It's nothing to do with bottoms. Okay. So we had the Russian Foreign Minister Lavrov saying that there's a serious risk of nuclear war over Ukraine.
Well,
and markets don't care. How do you explain that?
Basically, how many times have they threatened nuclear war?
Directly like this in a time of conflict, not too many. But yeah, I get your point.
He didn't actually say that. There were comments coming out after that they'd been misinterpreted, and what he actually said was that Russia, along the lines of Russia, does not see nuclear war. It's not in their makeup to look for nuclear war. It's other actors who are trying to.
Oh, really? So they're playing the central bank card. No, that's not what we said. You misunderstood. Is that it?
Yeah.
Okay.
Well,
yeah.
I mean, but I think this is not the first time that they've threatened nuclear war, right? I mean,
no, they shot a new ballistic missile off just last week. One of those hypersonic intercontinental ballistic missiles that
SAMARTs, what they call.
Yeah, it's a step up, and we don't have them. I don't think
it nearly goes as fast as you to the pub, Dale. 27,000 miles an hour.
I think 7 times the speed of sound. These things.
Well, hey, I want to say, the euro it continues to drift lower, and we have to be really careful with it, and until we can get above 107.60, which is now, I mean, it's over 100 pips. Well, it's about 100 pips away from where we're currently at. So we have to get above that red line that you see there, even to have a chance of seeing some sort of reversal. And obviously with the comments that are being made about what's happening in Ukraine, that doesn't seem like a likely scenario, at least anytime today. But that's something that I'm paying pretty close attention to. And I want to mention, I know you guys were talking about a little bit earlier. If you guys are in Europe, you guys and gals are in Europe, Ryan is going to have his own show called the Flow Show, which is pretty exciting. We'll be launching that here in the next couple of weeks, just getting everything prepared for that. But it's going to be a nice show, kind of updating you what's happening in the European markets and kind of what to expect as you come into North American trade, which will be a really nice way of Ryan and some of the European traders to get together and see what's going on. So I think it's going to be a really cool show, Ryan.
Yeah, thanks. It's I hope it's a big one.
Hey, hello, everybody. Ryan.
Hey, Kman, how's it going?
Did you pay royalties to BOA to call it Flow Show? Because it's what they produce every week as well, right?
Is it?
It's called the Flow Show, no?
We'll get in there and copyright it.
Yeah, you know what? Who does that? Bank of America?
I think so.
That's a small organization. Don't worry about them.
Yeah, I know.
Yeah.
Well, the best title, but it was already taken, was the Morning Wood.
Yeah.
What?
I don't know that.
Yeah, I know that one.
I don't remember that. Don't remember that.
I get morning wood every day. I get the morning wood show. All right, that's enough. So, but I mean, you could really call it the Forex Flow Show. I mean, you know, because you're really going to be talking currencies anyway. But anyway, let's continue on. So, Ryan, I heard you talk a little bit about the dollar yen here. You know, we broke this ascending trend line, and since I just heard Kman, I mean, what do you guys do with the dollar yen here? I actually think you got to buy dips to 125, but that's my feeling right now. I shorted some dollar yen yesterday. I just covered it this morning, like literally about 30 minutes ago. So I traded on the short side, you know, just a little bit, but that's it. I mean, I'm chipping away on the short side, but I really want to be long. I mean, meaning short yen. What do you guys think here? It's a tricky one.
Well, if you just look at levels 127 and 30.50 is the first reasonable support, I would say, which we are trading on right now.
Yeah.
Then, as you say, 125s, and then 125 should be pretty big right now. But then we are just ahead of the Bank of Japan. Some people are short dollar yen and yen crosses in the room, which is working pretty well. One had to have a bit of guts to go against the market, but then it's been settling well ahead of the Bank of Japan. I think the market is taking a breather, getting out of some positions. Probably the risk off has had an impact on the yen crosses, and now it's over to the Bank of Japan. If they move, it can go back to 123, in my opinion. If they don't, 130 is history.
So what do you expect? Do you expect them to move? I mean, come on.
I think they will do something, but to what extent, I don't know. They can't just sit there and let the rest of the market, let the rest of the interest rates fly, let the rest of the central banks go pretty heavy, let the commodities fly, and this there's their mandate. But as we know, in Japan, everything is linked. So I can hardly see Kuroda just sit there and say like, no, we're just continuing the way we are, because then he's putting a lot of pressure on the Japanese importers, a lot.
But isn't that what he's just been saying the last couple of weeks?
Yeah, but that's Kuroda. Remember Davos a number of years ago, he was saying something, and then in Davos he was sitting probably half drunk in a chair with other central bankers, and he went like, I don't care about it. I don't care about it. We're just going to add a bit more easy, and dollar yen got absolutely taken to the races. So I don't trust what he's saying right now.
Yeah, I think there's three. The easiest way to look at it, there's three levels of risk for this. The highest level of risk, and I said this morning on the webinar, the highest level of risk is that they actually change policy. The next lower level of risk is that they don't change policy, but they hint at something in the statement. The third level of risk is that because we're getting the outlook report, which is their updated forecast and such, so they don't change policy, don't say anything in the statement, but they hint at something in the outlook report. That potentially gives us something to look at as to how big a move we might get, depending on where the communication is, because it's like different levels of communication. Some are strong, some are more hinting. So that's what I'm going to be basing the news on, is where any news comes from. Is it going to be top level, big price moving, or is it going to be lesser level?
All right. Well, I'm sorry, guys. I was focused on something else. I just realized what time it is.
Yeah, we know.
No, but Dale, do you have a guest coming in today? Dale, you're muted.
Yeah, I've been messaging Anas. He forgot he's taking his son to school now. So
so you don't have a guest today?
No,
okay,
just happened.
All right. Just I was looking around. I was like, I just need to make sure. Now we have really quick. Let me pull up we have durable goods orders coming out. Here, let me open the data flash really quick. Move that out of the way. So we have durable goods coming out here in just 1 second. I'm going to keep us in the dollar yen. When we after the news, I actually really want to go over the S&Ps really quick because I think a lot of people are short at current levels. So we should really focus on what's happening in equities, especially with yields too. Before we let you guys go today.
It's 0.8 versus 1% expected, but it's still higher than the minus 2.1 last month. The cap goods number is 1% versus 0.5 expected. It was minus 0.2 last time, so a decent number there.
I don't know why Data Flash didn't push that information out. You know, it's interesting. Sometimes it does, and sometimes it doesn't. It's not moving the market. I think everybody's waiting for the PCE data on Friday. I mean, really, if you think about like what's the biggest impact data of the week, it's going to be the inflation data at the very end of the week. So I think that's going to be what moves the needle. But anyway, I always try to pay attention to data when it's being released because I think it's, if you get really outsized data, it can move the market. Well, let's talk a little bit really quick before we head on out of here. Let's talk about the S&P. The S&P, in my opinion, is near a lot of support. You guys are probably very familiar with this chart, this big head and shoulder pattern that we've talked, in nauseum about. If you look at, you look at it from just a symmetry standpoint. All right, let's talk about that, like where we could go from a time point of view. And if we look at it, we like this, like here, let me clone that really fast.
It's illegal to clone, Blake.
It is. I really wish I could clone mine.
Yourself?
Never mind. No,
I know you.
No, that's the last thing that needs to be cloned on this planet. But what I wanted to point out is that if time's going to play out, we can play out till like, let's say the end of summer, which, if you think about it, think this through. Is that realistic to happen? Unless something crazy happens in Russia, Ukraine, like an actual nuclear weapon is fired. Realistically, we're going to stay sideways, between now and through summer, right? So I wouldn't put it past the market of just, working some sort of sideways consolidation that looks like this over the course of the next, couple of months as we go into summer. So, that seems very realistic to me, and that's something that I think we just need to be aware of going into these really low levels in the S&P. I would not be chasing the market on the short side here. Not saying that it's not going to break down. It's just you run a lot of risk trying to be short down here, in my opinion. What do you guys have any thoughts regarding equities?
I still think my bias is still short. It's still bearish. Sorry.
I think you have to have a bearish bias.
Hey guys, can I interrupt? Nas said he could do it by phone, but we've tried that before, and it usually doesn't work. Right, Steve?
What do you mean? It works. His voice will come.
It will.
See.
Okay.
But he won't be able to share any charts, right?
Yeah.
But
I'll
what's
just reschedule it?
Yeah, that's probably the best.
Okay.
I don't know. Well, whatever you guys want, but
okay. Just for future reference, I know, but I discourage it. So I'll just reschedule. Thanks, guys.
Okay.
All right.
Sorry about that.
So anyway, just some thoughts regarding the S&P. One of the things that I think that can support the market near term, and like I said, this is not me saying the S&P is going to all-time highs. This is me saying that the S&P might consolidate between, 4,200 and 4,500, which has been, pretty much my view since for a while. But one of the things that I think can be supportive of the markets is yields coming down. And, if you look at like the 10-year, we are coming out of a descending wedge. And you can see this is, a bullish reversal here. Bonds might be bid up for a few different reasons. Maybe it's a little risk off, but maybe it's just more of, yields coming off. And if that's the case, that's going to be supportive of, the stock market to a certain extent. So I'm in the camp that the yields are going to be pulling back a little bit or consolidating recent gains. And, the bond market bounce may also support the NASDAQ and some of the higher beta things. So that's my view. You guys have any other opinions about equities before we let everybody go? I just wanted to make sure we covered it. Oh, I also want to cover precious metals, but any other views on the S&P or anything else for that matter?
No, we just had Philly services out as well. Bit of a mixed batch of numbers there. New orders down, the index was down, jobs were down, but wages were up, prices paid were up.
Got it. Sterling is getting close. It's new lows, by the way. New lows in the sterling. The dollar just continues to maintain a really nice bid. Look at gold, and I want to just point out the very important support that gold has been holding. But here's the risk, and here's the rub. All right, I've thought 1890 was huge support. On our analysis yesterday that we did. 1890, big support, talked about it a lot because of these spike lows down here. And you can see I have the support zone, but a break of that would target this 1875, which is the breakout point here. But I also want to point out, which is a little scary if you're bullish. Hold on, let me redo this really quick. If you're bullish, the scariest thing that I see right at this moment in time is that we have a bear flag setting up, right? And that's the thing that I'm seeing, which makes a lot of sense. I mean, if you look at what the dollar is doing at this point, why can't gold play that inverse relationship to the dollar and really come under pressure? But I'd be real careful with being on the short side of gold while you're above
measure,
the
bro?
90 level. Where does it measure to?
The flag,
let's figure that out. See, it's not illegal to clone. I just did it now.
Okay, good.
All right, so the target would be 1840 there. So
okay,
yeah. And oh wow, look at the dollar yen's rolling over. One of the things that could really give the dollar a little bit of a push over the edge would be the dollar yen showing some weakness. I mean, one of the catalysts has been, driving the dollar higher has been this massive move that we've seen in the dollar yen as well. So, Paul said massive move on gold if that plays out. Yeah, it would be. I mean, that would be a pretty big move. But one of the other things that you have to think about gold as well is when we snapped this ascending trend line here last week. I mean, that was it was a straight shot lower from there. It's just we're just paused at the support. Whether the support becomes key support or it's just a speed bump and the overall move lower, is to be seen. If you talk to Stelios, it's going to hold and go to 14,000 from here. But that's Stelios. I'm just giving you a hard time. You know that.
Hey, what have I been saying? Even in days and weeks when the metals have been
I said, in your defense, you said gold's going to go down for 30 minutes and then it's going to rally to 14,000. So
29 minutes. Yeah.
No, I mean, you've been talking about gold being weak in the near term, and gold is realistically is just consolidating gains. I mean, I look at gold as being a very bullish instrument. The problem that you have with gold is that if this long-term channel just stays in play, I mean the upside is not like great from here, but there's many people that believe that gold is going to accelerate higher at some point, and I can't argue that, really. Can you?
Yeah, we'll be backing up the truck in June, July, I think.
You think so?
Yeah.
All right. Well, hey, one of the other things,
that's after my birthday.
After your birthday?
Yeah.
Oh, after your birthday. When's your birthday, Dale? Just so everybody can mark their calendars.
May 27th, Memorial Day
May
weekend.
27th. May 27th. Dale
I'll
turns
be
29.
89.
All right. Just wanted to say Bitcoin. There's some news that Fidelity is allowing Bitcoin to go in people's 401ks.
Oh my God.
Craig in our chat room, he mentioned that. I missed the headline. Must have been sleeping at the time because I think it came out early, but I don't know. But anyway, take a look at Bitcoin. It hit new trend lows yesterday and then gave us a nice little hammer. You know, this is all hovering around the 618 retracement. I have to say that Bitcoin's holding up pretty well, even in this risk aversion type of market that we're seeing, that we've seen recently. Bitcoin's held up pretty damn well, much better than I thought it'd be. I thought Bitcoin would be either near this channel support or back in the lower, about 30,000 range. But we're holding up pretty well despite this bearishness. But anyway, I thought I'd mention that. So anything else? Anything else you guys want to cover?
Not for me. I'm all good.
I signed up to Netflix, so you might get a little popper.
Just on.
Did you?
Yeah.
Yeah. That's awesome, Dale.
$15, man. Yeah.
I've been using Netflix since 1990 something, 97, 98, I think.
Yeah.
Yeah. Netflix has been around
it's a necessity, isn't it?
Yeah. What were you saying, Kman?
Just for those who want to counter trade these dollar moves, to take into account we are end of month. Few models are showing at dollar buyers, and tomorrow is month-end value date, and usually we have the possibility that U.S. corporates are repatriating a few dollars. So just to bear in mind, if one wants to go short dollars, to keep that in mind.
Yeah, very good point. Yeah, and a lot of models are showing dollar selling, but a lot of that could be taking place right now, or dollar buying, excuse me. But a lot of that could be taking place right now.
Yeah, absolutely.
As well. They love to leak the stuff out to the retail traders, as they're taking the other side of that after they've already gotten pushed their liquidity through. So, anyway, I want to thank everybody for being here on the F.A.C.E webinar. Make sure you check out the Trader Funding Program if you haven't done so already. Make sure you try ForexAnalytix, get in our community. We have literally one of the most active communities out there. Like, this is
best.
I'm just going to show you from when I got up. This is, and I jumped in the wrong chat room because I was closing out my dollar Canadian short last night when we were down at like 127, and so I was posting in the wrong chat room because I stopped in the trades room here, and when I got up this morning it was just right here. But anyway, you can see how active it is. That was. When Kman said, "Hey, Blaker, you're stuck in the trades room," that was just over an hour ago. You can see all of the chatting just happening right since then. So anyway, come join the chat room. It's really probably the most active trader community around, and we've got several different rooms that you can go into.
And I guarantee you the chat rooms played a role in people getting through their assessments.
Oh yeah. 100%. Matter of fact, let me go back over there. So the trader funding program, we even have a discussion directed towards the trader funding program alone, and anybody can join that discussion, but there's a lot of chatting going along there because we've had so many traders that got funded with live trading accounts now, which is awesome. But the thing is there's some, there's definitely you have to think through what you're doing with that, and just realize that there's no time constraints here, and you get access to the ForexAnalytix community when you're in the trader funding program. So, make sure you check it out. It's what we're finding is a lot of people, like if you have $100,000 to trade, let's just say, You know, you're like, okay, I got $100,000 allocated to trading the markets. But you're like, but I don't really know if I want to put that money at risk. Well, doesn't it make sense if you think you know how to trade, you just put up $1,000 and then, you know, you get $100,000 account. If you pass an assessment, you put up $1,000 and then your risk is only that, you know, assessment fee. And then once you start trading, you know, you make 75% of the profits. That makes sense to me. And that's what it makes sense to a lot of people. And that's why, you know, people that at least if you think you can trade, then do it. We'd love to have you join our ranks. So anyway, check it out. All right, guys, I just want to say we'll see you all. We'll see you all in the morning edge in about 30 minutes from right now. So thanks, everyone.
Cheers, guys.
All right. Thank you. And good call, Ryan, on the yen starting to come off pretty good, and great review, everyone. Really mark your calendar for Friday, because I think it's the first time I've talked to someone, you know, Danielle DiMartino worked for somebody that was on the Fed, but this guy actually was on the desk. Okay. So
oh yeah, you're talking Friday, to the Fed guy. What's his name?
It's Joseph Wang.
Joseph Wang. I cannot wait for that interview. That's going to be a great interview on Friday.
We'll finally find out. Guarantee I'm going to ask him this question. Is there really a plunge protection team?
That's how I always ask. Yeah, and no one will give me a straight answer.
All right, maybe we'll get it Friday, buddy.
Yeah.
All right. Anyway, guys, have a great trading day, and we'll see you all tomorrow. Thanks for your attention, and check us out for at least $1. Go out there if you're new to F.A.C.E and see what's behind and underneath the tip of the iceberg here at F.A.C.E. See everyone tomorrow. Thank you, team.